Hi, I'm Richard Brown, Associate Professor of Business Strategy at Penn State Harrisburg. And here I'm going to talk about the effect of a strong US dollar and really the effect of a strong US dollar on US based corporations that do business outside of the United States. I'm recording this June 3rd, 2022. I'm going to show an article from today's Wall Street Journal. And we're going to discuss this from a business strategy standpoint in terms of currency fluctuations. So why care about the dollar, especially if you're in a strategy class as opposed to other classes? Well, currency exchange is important to a firm's budget. Of course, decision making at the top of the organization will at least partially depend on the company's budget. So budgetary issues are paramount, and it's also should matter for investors' appetite for the equity of the firm. So if the firm's publicly traded, the equity valuation in times of strong dollar versus weak dollar, or if the company is in the output or input market, will matter. And one of the things you want to think about with currency exchange is when we say, well, will it matter negatively or positively? Well, it all depends. And so I'll talk about why it all depends. Studying currency fluctuations normally is going to be a macroeconomic or financial phenomenon. You'll normally see something like this in a macroeconomics class or a finance class, of course, or maybe an accounting class. But business strategists should also be aware of the effect of these fluctuations on operations, because operations can at least partially be dependent upon budgetary issues, which of course will be dependent upon currency exchange. So the strong dollar or weak dollar, but in this case, it's a strong dollar, does matter for a business strategy class, especially in areas of the class. When I teach business strategy, we have areas that talk about the external environment and macroeconomic shocks and other types of shocks. And so a strong dollar in this case can be a negative shock for certain firms. That's kind of where we will focus. When we have currency discussions in a business strategy class, these are some of the things that I at least try to get through to students. Currency issues are, for some reason, they're difficult, I think, for a lot of students, especially undergraduate students, to understand. Even after they've taken maybe macroeconomics and have talked about currency fluctuations in other courses, it's not necessarily an intuitive thing to understand. So let me try to dispel some of these things here. First thing is that currency is always studied in dyads, and a dyad is just a pair or a couple. So two countries or two firms or two people. That's what a dyad is. So currencies are always studied against another currency. So they can be studied against a basket of other currencies. So I'll show you a measure that shows the US dollar's strength against a basket of other currencies. But currency issues, for the most part, have to be dyadical. So when we say, is the dollar strong? Well, the real way to ask that question is the US dollar strong with respect to what currency? So is it strong against the euro? Is it strong against the yen? Is it strong against the Colombian peso, et cetera? That's really how we would have to ask that question. So it's a dyadical measurement. And when we're thinking about companies that operate overseas, it really matters which countries you operate in. It could be at any given time that the dollar is strong against the euro and against the yen, but not against the peso, Colombian peso. And so if I do a lot of output market business in Colombia, then certainly that's going to be different than if some other firm, one of my rivals, does most of its business in Europe. So it really depends on where you're doing the business specifically, and then of course studying this dyadically. The second thing is I typically hear my students talk about this from a macroeconomics course standpoint as export firms versus import firms. And export versus import, I'm claiming, should be replaced with the phrase output versus input. Export versus import, when I hear that phrase, I conjure up, companies that are bringing products in from overseas on ships, or they're shipping products out to overseas, things like this. And that certainly can be the case. We could be moving physical materials in and out of a place. But I think if we think about it more as Are we in the output market in these countries, or are we in the input market in these countries? Are we selling things in this foreign country? That would be the output market. Or are we sourcing key inputs, materials that go into our final product overseas? That's going to matter. So strong versus weak currency is one thing, and output versus input is going to be another thing. So when we want to think about answering the question, is the strong dollar good? Is a weak dollar good? It is going to be dependent upon where we do most of our transactions, in the output market or the input market, and then which countries. Okay. And the third thing is that currency fluctuations can cause massive accounting shifts. I'll show an article in a minute about a couple of large firms. And so these accounting shifts can be non-trivial. They can be quite substantial to the tune of hundreds of millions of dollars in a given quarter of revenue. And so currency fluctuation should not be something that is taken lightly in any of these disciplines, and business strategy being the one that I'm most focused on. So I'm going to go to the article in question. This is from June 3rd, 2022, Wall Street Journal. And obviously the title is Microsoft Cuts Its Forecast, Citing the Effect of a Strong Dollar. The strong dollar has been in the news for quite some time, many, many months as of the recording of this video, June 3rd, 2022. It is not a news story, but it's becoming more problematic as the economy looks like it may be going into recession. And it has another deleterious effect in addition to some of the other issues that we're having in the world in June of 2022, such as war and inflation and possibly a recession, et cetera. So the article I've highlighted in yellow, kind of what I would like you to focus on. Microsoft cut sales and earnings guidance for the current quarter, citing the impact of foreign exchange rates as the stronger US dollar takes a toll. Notice that they're not revising guidance because they're not selling as many things. Right? This is going to be the fact that there's a currency issue is going to reduce its revenues and potentially its earnings, but at least its revenues, even if we've sold the same amount of, office products or, web services, whatever it may be. And so that's the first thing to note, is that this is simply a foreign exchange rate manipulation back to US dollars from some other foreign currency. And that is what's cutting the sales and earnings guidance at a large firm like Microsoft. Second column, US dollar index. This is that thing I alluded to a few slides ago, which is even though I say that currency studies are with respect to some other specific currency, there are economists who have compiled data such as the US dollar index, and that basically tracks the US dollar against a whole number of different currencies. And so the figure that you have there would be more of like an average of how the dollar is doing against, any individual currency, but then averaged over, I don't know, a dozen or 2 dozen currencies of the world. So it's one way to look at the US dollar as a whole. Is it strong? Is it weak? And this is saying that it's up more than 6% so far in 2022, and 2022 is not even half over yet. And even more telling, it's at its highest level in 20 years, so since 2002. It has appreciated precipitously against the euro, the pound, the yen, and many other currencies. And that is a problem sometimes. It's going to be a problem for companies like Microsoft, and that's because Microsoft sells a lot of things overseas. Okay, so that's one of the things I had said before. It depends on if you're selling things overseas or if you're buying your inputs overseas. One is going to be potentially a negative effect. One could be a positive effect. In this case, it's a negative effect. Third column, just to quantify this, Microsoft is now expects its fiscal fourth quarter sales to be between these two ranges. Let me take the midpoint of these ranges. So we'll say 52.35 billion. Okay, down from 52.6 billion. Okay, so that's a few $100 million. So just from the currency fluctuations, Microsoft's revenues have gone down we're going to call it $300 million. Okay, so, and that's obviously a significant amount of money. It may not be, 10% of Microsoft's revenues or even close, but it's still a significant amount of money, especially when we know that net income and profit margins are certainly much, much less than revenue. Finally, on this page, the dollar has benefited from its status as a haven for investors during tumultuous financial markets and the raising of rates by the Federal Reserve. one of the things to understand is, why is the dollar strong? The dollar is strong for a number of reasons. One, if you think the world economy is, drifting towards a global recession, which lots of people are saying as of right now, then you have a flight to safety. You have investors and even governments they have a flight to currencies that are notoriously stable, and there is no currency really more stable than the US dollar. And so you see people kind of buying more US dollars or moving into more US dollars. And the second thing is, raising rates will cause a strong currency. And so why is this? When the central bank in the US, the Federal Reserve, raises interest rates, what it's doing is it's setting up a mechanism that is inducing people to bring dollars to it being the Federal Reserve. So I raise interest rates from 0 to, say, 1.5% and then 3% or whatever it may be. And by doing that, I'm inducing investors, and investors can be governments too, but whatever the investor is, a firm, a government, a person, I'm inducing these entities to give me dollars back, and then I will give you a higher return on those dollars. And so it has another effect. So raising interest rates has another effect, in addition to many other effects that are talked about in the news, and that is, by raising rates, we create a stronger dollar. Now, if all central banks of the world were raising rates in unison at the same level, generally, that would really have a zero sum effect. But because the United States is raising rates more aggressively right now in the middle of 2022 versus other countries, Japan and Europe are two areas that are certainly have not raised rates very much, if at all, then it's going to cause more flight to the dollar, which is going to make the dollar stronger. This article continues. Just a few things I want to mention here. It's not just Microsoft. So Salesforce this week cited the stronger dollar and lowering its sales outlook for the year. Again, not because the company is claiming that people are buying less of its software. It's because of the currency fluctuation in and of itself. And it expects that the impact is going to be about a $300 million net impact versus what it thought in March. So this is $600 million from $300 million worth of impairments. Okay, the $300 million was in March what they had expected the strong dollar to impair its revenues by. It has now increased this to $600 million. So we're talking about, a half or a third of $1 billion in terms of revenues, and that is a non-trivial, at least to some degree. And then the final highlighted area here just gives you more of a broad scope. Instead of looking at a specific firm like Microsoft or Salesforce, looking at the S&P 500. So the S&P 500 is the 500 largest publicly traded companies in the United States. And so they will break this down according to different parameters. And so they have, in this case, the S&P 500 Foreign Revenue Exposure Index. This is going to be made up of firms that have the highest sales outside of the United States. So we assume they're domiciled in the United States, but they're selling a lot more outside of the United States. And those companies' stock that is down are down 17% in 2022 versus the S&P in general, which is down 12%. So it's underperforming the S&P in general. And then the second part of this paragraph is basically saying that the S&P 500 U.S. Revenue Exposure Index is only down 7%. It's beating the S&P 500 generally, and really beating the S&P Foreign Revenue Exposure Index. So the thing to think about here is that if firms are based in the United States, they're selling most of their stuff in the United States, and their inputs are coming from the United States. So think about a domestically focused firm. These firms will not really have any negative impacts from a strong dollar and currency fluctuations. So domestic companies are not going to really have an issue here. The companies that are really going to have an issue are the ones that are selling in the output market to overseas customers. That's going to be where we're focused here today with a strong dollar. And if we think about we'll just think about a simple example. We'll say XYZ Corp. And we'll take two states of the world. We'll take one a year ago and one today. Okay, so we'll say 6/3/21, 6/3/22. Let's assume for a minute that we're saying that XYZ Corp sells overseas. We're going to say to Europe. So we're going to use the euro as the currency example. And so we're saying XYZ Corp is in the output market. It sells things to European, it could be European companies, it could be European individuals, whatever it is in Europe. And so let's say that each year it sold, and I'm never good at making the euro sign. So it sold 1 million euros worth of stuff, whatever that is. Okay, so each year it's done this. And so the setup here is US-based company selling to customers in Europe, and we're claiming that the company is doing just fine this year versus last year, right? It's selling the same amount of stuff to people in Europe, and so none of these effects have anything to do with the fact that our sales are bad. It's all going to be the currency fluctuation. And the way you want to search this is, so you want to Google USD to Europe, EUR, okay, and that'll give you the exchange rate for the US dollar to the euro. And I have it set on a 1-year chart, and you can just see here that 1 year ago, $1 got you 0.82 euros, okay, and today it's 0.93 euros, okay, so that says it right here, 0.93 euros. And so 0.82 to 0.93, it's quite a big move for currency. That's actually a very big move. And so what we're going to do is we're going to say, if we sold 1 million euros worth of stuff last year versus this year, what does that mean for our actual sales? And we're saying this because if we're a US-based company, accounting rules say that we have to report everything in US dollars, right? So we don't have sections of our report that says, oh, well, this section we're reporting in euros and this section we're reporting in dollars. Everything has to be put into dollars. And so that's where this currency fluctuation is affecting Microsoft, it's affecting Salesforce, and of course, in our fake example, it's going to affect XYZ Corp. So we simply, okay, let's put this here. Let's see. So we have 0.82 was a year ago. This is the exchange rate. 0.93 is now. And all you're going to do is divide. Okay, so you're just going to divide these two things. Because you may claim that 1 million euros was your revenue, but it's not. Your revenue is what that is in US dollars. So let's do some simple math. Oops. So 1 million divided by 82. Okay. So where we had 0.82 as our exchange rate, we're saying that is, I'm going to round it to $1.22 million. Okay. $1.22 million. So in 2021, we got $1.22 million in revenue from our sales in Europe, our output sales in Europe. Okay. I'll box that in. And now we have our million euros in 2022. And so we're going to now divide this by 0.93. Okay. And we have $1.075 million. And so the effect, write that down here. Okay. $1.05 million. And so in this case, what we're saying is that our revenues have decreased by $145,000 from 2021 to 2022. And the only variable that's caused that reduction is the currency exchange rate, because clearly we sold the same volume of euros of worth of goods, whatever it is that we sell here at XYZ Corp, same value. And so the currency fluctuation will cause this $145,000 drop. And if you think about $145,000 is about 12% of 1.22 million. So what we'll say here is that our revenue decreased 12% from one year to the next, okay, due simply from the currency fluctuation. Now, one of the confusing things about currency fluctuations is if we were, let's imagine now that we're not selling things in Europe, but we're going to Europe to buy things that are going to be inputs into whatever it is that we make at XYZ Corp, the opposite would be true. Okay. So in that case, we're actually going to be made better off because our dollars are going to buy more euros. All right. Every time we exchange our dollars in for euros and then buy things in Europe in euros, we're going to be made better off. But in this case, what we need is we need more euros to get the same $1 that we had to get last year. And so that's going to cause this 12% decrease in revenue in this example. And that's exactly what's going on at Microsoft. That's exactly what's going on at Salesforce.com. And so what I want to do in this video is to make sure that we're understanding some of the basics of business strategy when it comes to the effect of a strong US dollar, the dollar being the strongest it has been against the basket of currencies in 20 years. Thank you so much.